watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we help you understand the trading action for the day as well as the strategies that you should be adopting in the current market scenario. Market masters will be joining in to help you understand the current state of the markets and what can you expect going forward from here. Well, as far as the overnight trade and yesterday's trade is concerned, the Nifty yesterday did have a volatile trading session because investors were skeptical about the recent market recovery that we were seeing, and therefore the markets chose to stay neutral right ahead of the Nifty weekly expiry that's today. So the Nifty bulls are now going to be reacting to two key macro data points today again. CPI data and hoping that could add a green color right ahead of holy festivities this weekend. Remember, India's retail inflation eased to a 7-month low of 3.6% in February of 2025, down from 4.3% in January. The industrial output growth was also above expectations at 5% year-on-year in January of 2025 as against 3.2% in December. So on both the points, there was a cheer that could perhaps be looked at positively by the street and the sentiments there too. Now, apart from this, of course, we will be looking at what's happening globally. Steel stocks will be in focus again. Remember, there is this decision of the United States to impose a 25% additional tariff on steel and aluminium imports that has come into effect starting March 12th. That will be in focus. But again, one more domestic data that you have to look at is equity mutual fund inflows have slipped by 26% month-on-month in February to 29,303 crore rupees. This is the lowest since April of 2024, partly of course due to market volatility and fewer working days as well. So that's important to look at. Apart from this, we'll also be looking at how the global cues are shaping up. Of course, after the losses, we've actually seen some rebound in the US as well. S&P 500 bounced about 0.5%. Nasdaq was up by about 1.2%. Dow Jones, however, still down by about 0.2% even in the overnight trading session. Now, the dollar index, which tracks the greenback's performance against a basket of leading global currencies, that slipped about 0.02% at 103.5, and we've actually seen the benchmark yield unchanged at 4.3%. Asia Pacific markets also rose in the early morning trading session. So we've seen a softer US inflation report also. That's also helped reverse 2 days of losses on the Wall Street, and therefore sentiments turned positive on the Asian markets as well. So the US consumer price index also increased by 0.2% month-on-month, bringing in the annual inflation rate to 2.8%. We've seen South Korea's coffee rise by about 0.8% in the morning trade. Australia's AS 200 rose in the early trade as well. But gave up some gains in the interim. Then we've also seen markets in Japan and Hong Kong futures also rose in the Thursday trading session. Benchmarks in China were, however, mixed. Foreign institutional investors, they've again remained net sellers of the Indian equity markets. 15 straight days at 1,627 crore rupees sold off in yesterday's trade. But domestic institutional investors buying for 25 straight trading sessions. Even yesterday, they bought equities worth 1510 crore rupees. So that's the overall setup. Let's now welcome our guest on board, Mr. Devendra Choksi joins in. He is the MD at TR Choksi Finserv Private Limited. Warm welcome to you, Devendra sir, and wishing you a very, very happy Holi in advance, and hope this year turns out to be more colorful and bright and prosperous one for you, for your loved ones as well. Tell us, what is the sense that you're getting in the markets? Are we in for some bright Holi this time?
Yes, Sakshi. Good morning and wish you happy Holi as well. Yes, certainly I think we should be expecting the brighter days now from here on. We have seen whatever the panic selling in the market, which has been, I think, hurting all of us, is probably over. Couple of reasons for which I believe so. One important being the dollar strengthness, I think, is no more there. I think it is weakening actually. And correspondingly, the currencies in emerging markets, including Indian rupee, which was weakening up till now, I think is now started stabilizing, and maybe it can inch upwards to a certain extent. That's possible. Should that be the situation, then the panic selling which the FPIs ended up doing, largely because they wanted to take the money back home, they might get probably stopped on this particular aspect. At the same time, what one has seen is in US market, the markets are patchy. They are not stable out there as well. So no point dollar money going into US stocks. I think it's unlikely happening in the current times. So given that situation, I would like to think that Indian stocks, having corrected on valuations, they offer good opportunity for some of the long-term investors in the market. And that's where I believe that with a stable currency, you are likely to see the return of money back into the Indian markets, and that's why you should be seeing the relatively better times going forward from a perspective of looking at the stocks and the stock price and its valuations.
Mr. Choksi, I also want to get a sense on how are you looking at the macro data that's coming in over the last evening, and is there any indication that this may be structural recovery on the IIP, first early indications of growth, as well as when we talk about inflation picture also sooner than expected, we are seeing dips below 4%. Is that, of course, it's encouraging for now, but is it going to be sustainable is the key question there, sir.
So the crude oil price is below $70 to a barrel and staying in the range of $65 to $75 to a barrel is a very, very promising for prospects, I think, for the inflation as a whole. And in my viewpoint, I think the inflation has to remain stable. Two factors: one, the crude oil prices, of course, I think, which is the input, and the interest cost, I think, which is again the input, has to remain on the downside. Should that be the situation, which we believe it will be, in given situation, I think you will be seeing the inflation pressure getting reduced, interest rate also correspondingly will get reduced, and overall economy will invest higher amount of investment as well. So consumption-led activity will also once again return back into the economy. So overall, all the equations are appearing to be going in a positive direction. And that's where I believe that I think one could possibly see this market as a relatively better market going forward now.
Okay, but at the same time, sir, there is this increasing talk about how, of course, we are hearing every day Trump's tariff talk, and how there is an increasing chance of, US recession talks now emerging yet again after a year and a half back again. Do you think that is a key risk for emerging markets like India? Could that be a possibility?
Not really. Honestly, I think US slipping into recession, I think that is their problem that they need to correct it. As such, I think the economies are not, I think, united in the sense that I think everybody wants to protect their own turf. So if India is protecting its own turf and in turn creating the investment environment, India would be relatively better off, China would be relatively better off compared to what USA is. USA is a consumption-driven economy, and I think if it has to protect itself, probably they have to set right all the equations for manufacturing in USA, including the cost of production to be brought down, including I think the availability of people for producing goods and services. Should that happen, in my viewpoint, I think US will probably stage a comeback after a while, not immediately. And till that point of time, India definitely has its own program. So I don't think that too much of worry that one should be having on that front at this point of time.
Okay. The Nifty has indicated an opening above 22,600 in the pre-opening trade, 170 points higher. That's a strong open as far as the pre-open trade are concerned. I mean, you can see a 0.5% uptick right now. 22,579. That's also comfortable. Above 500, 22,500 yet again, but remains to be seen whether, of course, it will be sustaining ahead of the 3-day weekends that we have. That's important to track. But looking at the kind of gradual signs of recovery and the pullback we are seeing in the last few trading sessions, sir, would it be fair to assume that the worst of sell-off that we've seen in the 5 consecutive months is now probably behind? Have we found a bottom that we were all looking for?
The answer lies in the derivative markets, and as I see that the shorting in the derivative market has stopped. In January month, we have been having significant amount of shorting happening in the market. The markets are going on a significant amount of short selling. And the reason was that the underlying equity market was not providing enough opportunity for exit because of the poor depth, the lack of liquidity, even foreigners. So shorting into the derivative market and delivering into equity market was the force which most of the FPI adopted. And to my mind, I think if they stop shorting in derivative market, at least for the time being, then in such a situation, I don't think that I think we are likely to see the further pain in form of higher amount of delivery and resultant fall in stock prices. So maybe I think we should be asking for relatively stable kind of a market now vis-a-vis what we have seen in the past.
Okay. Let's come to some specifics and stocks and pockets now. I'll start off with the telecom space. We've seen this big development take place over the last, 30 to 44 hours. We've seen first Airtel announcing a tie-up with Elon Musk SpaceX to launch Starlink services in India. Then it was Geo that last morning that they, talked about the similar kind of a tie-up with Elon Musk. Now, I wanted to just understand a bit. A couple of years ago, in fact, just about 1.5 years ago, we've actually seen the leaders of these large telecom players, speak against, SpaceX or a Starlink's entry. And in case they also said that, these players were to be invited, they should be same on the level playing field as Indian telecom players. They should be also bidding for spectrums. They should be also paying license fees so that it is fair to the other players. Now, with this tie-up getting announced, what exactly is your sense? Are those issues now put to rest? Will Starlink get an easy entry into India now?
Well, I think that would be the government clearances which will probably spell out whether it will be easy entry or with the conditions attached to it. So till the time I think it comes out, we cannot comment on it. But more importantly, out of the total addressable market in telecom, which is around close to 19-20 billion, the satellite-based telephony, I think you would assume somewhere around 1 to 1.5 billion kind of market as a total market share. And given the kind of spread that India has already done by laying down the fiber in all 24 circles, I would like to think that leave aside those unapproachable areas in the country, the rest of the country is completely wired with the fiber. And that's where probably the likes of Geo and the Bhartis have actually done a commendable job in this particular thing. Not to leave behind the BSNL, which is also putting in significant amount of investment into the cabling network under the BharatNet. And that's where probably I think we are likely to see the large part of the land getting covered with the connectivity on the broadband side. Now, I think that will leave some critical areas which are not getting covered, which will have to get covered through satellite. And they would include the areas within defense and the military operations. They will include the areas in the some of the deep-rooted mines which we have inside the hinterland of the country. And I think healthcare, to make a few points clear, they would probably be the biggest consumer of the satellite-based telephony as I see it. And that's where probably I think this tie-up would be a meaningful tie-up with a $1 to $1.5 billion kind of addressable market that we are talking about.
Fair point. We are actually seeing some ticks on the higher side on both Bharti Airtel and Jio today. Of course, we are inching closer to the settling in the pre-open trade. We'll come back to it. Right now, still holding about 60 points higher on the Nifty 22,530 at this point in time. Let me also focus on some of the other pockets. Banks is something that I wanted to discuss. Especially looking at the last few days of recovery that's taking place, and that's across the board, be it the large private sector banks like HDFC. We have seen NBFCs also take the front row, Bajaj Finance, Shriram Finance, and the like. We're also seeing PSU banks, for instance, also to show us some recovery or signs of reversal. What is your preference within the large banks and financial space at this? Where do you find your comfort, sir?
The size, I think importantly the size. The balance sheet size in the banking space makes me more comfortable. The larger the bank, better the ability to lend, and better the ability to lend means I think sustainability is on the higher side. So certainly I think I prefer to go with the larger banks, be it in the corporate segment of the bank or be the largest, I think the NBFCs in the country. Which are focusing on the multiple product streams, including the retail segment. So, from a perspective of looking at some of these companies, we believe that I think the well-known, well-managed companies which are having a stable portfolio allocation across the verticals, be it industrial vertical, be it infrastructure vertical, be it housing vertical, or be it retail vertical. In each of the vertical, where you have the balanced portfolio, that's where probably I think your size would play a critical role in giving the advantage to you. Some of the larger corporate banks, they remain relatively more favorable to me. Some of the larger NBFC companies, housing finance companies, they remain relatively more favorable to me. From a perspective of adding them into the portfolios.
And sir, how have you assessed what's gone on with IndusInd Bank over the last two odd trading sessions? After the management has also clarified there has been some uptick yesterday, even today in the pre-open, there is a continuation of that recovery, but a 27% downtick on a single day is what we saw. Was this only a knee-jerk reaction? Is there more to worry when it comes to the pain that could continue on the balance sheet for IndusInd Bank after this, loss that they are going to be taking as a hit? What exactly is your, advice to clients holding or investors holding IndusInd Bank in their portfolio at hand?
The first piece of advice is that don't write off any company because of this kind of incidences which do happen. They are happening because of the dynamics of the universe in which I think they all are operating. So yes, certainly one would argue that I think they are required to have a stronger management, and that is a fair ask, I guess. So that probably I think is even understood by the bank themselves that they have to employ the stronger management out here. But having said that, I think the fundamentals of the business they support them. I don't think that I think one should easily write them off from that perspective. Now coming to the other aspect of it, these are some of the very dangerous kind of a situation in which the entire world is operating. When you have on one side the currency depreciation happening at a very rapid speed, and as a result of which I think you require to do the hedging on the currency, and that involves a cost. This is not easy. I guess I think this is where probably many of the banks, many of the institutions will incur significantly large amount of cost as well, apart from managing it well through the use of technology, etc. And that's where I think one would really to vary that this business is not at all easy for some of the players, and investors will have to pay for the costs for compliances on this particular point. So that is a cost I think that one should look at. That is why I mentioned that the size of the balance sheet is better. Should you want to pay higher amount of compliance cost, I think your size of the balance sheet will absorb this kind of cost. Smaller size will make you vulnerable in this kind of environment. So that's only the viewpoint which we add to this. Otherwise, I think we believe that stability should soon return. Of course, I think one-time write-off will have to be seen in the balance sheet, but otherwise stability should return in the business maybe 6 months down the line.
Right. Devensa, I also wanted to get a sense on one more pocket, and that's the IT pack, which has been showing us some signs of troubles. Brokerage houses are also cautioning that the expectation on growth that we had in FY26 for the large IT players may not actually spell the way that we had expected, especially again, there are concerns on AI, there are concerns on tariffs. What is your own understanding of IT at the current levels, and what should one do?
So yes, I think the uncertainty is not a good friend for any of the businesses, including IT. On one side, we are seeing a significantly large amount of disruption happening in the global environment under the variety of technology use. And in my viewpoint, I think that is a challenge for most of the corporates to remain on the ground, even survive on the ground. And that's where some of the larger IT companies will play a meaningful role to help them survive better. Most of these IT companies, India IT companies, apart from the conventional model, they've been adapting very smartly the digital twins model, which basically helps them in getting a larger amount of businesses from those customers. Maybe in a near term, you are not likely to see the immediate results of it, but I would strongly believe that I think they will have a case to survive and grow in this environment. We'll have to keep our eyes and ears open. Maybe it would have started by now, and if not be turbulence in the US, it would have started. Probably I think we'll have to wait and see how US settles down, and thereafter I think can create further beyond that. But as of now, muted growth to relatively higher growth in some cases would be the expectation that one could have from these companies as far as the business performance is concerned.
Okay. And lastly, before I let you go, sir, I want to ask you, since we are sitting on Holi, if somebody wants to invest their fresh funds today up until next Holi, where exactly should their focus be? Any key top sector or stocks that you could mention, sir?
Opportunity remains everywhere. In fact, in many sectors and many stocks, wherein I think the opportunity is around. We believe that I think the falling interest rates scenario, falling inflationary scenario, and higher amount of capital spending in the economy and industrial spending in the economy would probably demand larger amount of credits, and that's where probably we believe more confidently that some of the larger banks and the NBFCs who have employed significantly a large amount of fintech at the front and processing the loans at the back end through the use of AI. In my viewpoint, I think they are the ones who should remain relatively more stronger in coming 1 year and after. So I think investment case is included into this particular companies. Maybe I think one will have to look at them relatively more selectively instead of generalizing anything at this point of time. Second opportunity, as I see it, with the disruption going on, it is the capital and capital goods segments, particular power related segments in the renewable space. There we see, I think, the higher amount of prospects. And last but not the least, or maybe a couple of more, the auto ancillary and engineering R&D business in IT. They remain relatively more stable from investment point of view at this juncture. One cannot be asking for one quarter result, but one should be looking at I think 3 years view into this particular sectors.
Okay, fair point. Well, Devin, sir, thank you so much for sparing your time for us and explaining to us what to do with various sectors and the current market scenario. Always a pleasure to speak to you, sir. Thank you so much.
Thank you so much.
All right, viewers, we'll prepare for the markets to open now. The pre-open has settled higher, 22,540, and we are seeing the final ticks, 22,534. On the higher side is what we are looking at, 50 points up for the Nifty, 0.2% higher. The Nifty Bank, 0.2% up as well at 48,180, 118 points higher. So the Nifty Bank is a tad bit better than the Nifty right at the opening tick. Let's also pull up the mid caps and the small caps to see how they are shaping up right at the opening tick as well. There has been some mutedness in the mid and small caps over the last few days as well. Mid caps about 0.2% higher, almost in tandem with the large Nifty that we have seen. The Nifty small cap, however, absolutely flat with just green and the red bias now switching at this point in time. Let's actually look at some of the stocks. I want to first check IndusInd Bank. Remember, after a day before yesterday's 27% fall, yesterday there was about a 4.5% uptick. Again, it's opening about 2% up at 698. So there has been some gradual recovery on IndusInd Bank. Let's also pull up some of the other heavyweight banks. Remember, yesterday HDFC Bank was taking the baton in its hand and pulling up the Nifty Bank higher. Today it's flat at 1711. No worries. Let's look at ICICI Bank and let's also look at Axis at the same time. 0.5% uptick for ICICI Bank, but let's also pull up IT. Remember, yesterday that was in a pain point, 3% lower. But today I think there's a 0.5% uptick on the IT. So there is some sign of recovery taking shape on the IT pack. Some of the stocks coming on your screens with higher opening. 1281 advances to 371 declines. So the market breadth is also skewed towards the positive. That's also good. This is the weekly expiry session that we are seeing, and we have a positive opening on the Nifty Bank, on the mid caps, as well as on the IT and the banking space, like we said. So FMCG, pharma and realty, they seem to be on the back foot, but rest of the sectors still seem to be opening on a higher note, and that's a positive as well. Let's pull up the top 5 Nifty gainers for you to really see which are the top stocks that are buzzing in trades today. You'll be able to see a whole host of stocks from the oil and gas space like ONGC. There's metal stocks, Tata Steel up and about, IndusInd Bank, of course, among those winners, 1.2% higher. Tech Mahindra, LTI Mindtree. You also have other stocks like Bharti Airtel and Bajaj Finserv also opening on a higher note. Let's look at the top losers at this point. But apart from Bharti Airtel, even in the telecom space, we are looking at how MTNL is opening on a stronger footing. I think about 11-12% or kind of an uptick that can be seen on MTNL. That's the news in focus. And you can see that both BSNL and MTNL are raising about 13,000 crores from asset sales, so monetization underway. And therefore, the telecom space, especially the PSU telecom basket stocks, they are in focus as well. So that's also something that we will continue to watch out for. Let's actually welcome our another guest on show. We have have Mr. Avinash Gorakshakar, Head of Research at Profit Mart Securities, joining in on the platform. A warm welcome to you, Avinash, and thank you so much for taking the time out. First up, a quick question on the market and how are you assessing the current recovery? Is it going to be now sustainable, and do you think the worst is behind in terms of the correction that we had seen thus far?
See, I think one good part about what has happened in the markets is that the CPI numbers for February, which have come in, have pleasantly surprised the markets. It's a 7-month low at 3.61%, and that gives a very strong indication that possibly in the month of April we could possibly look at another rate cut. Which I think the market should be pleasantly surprised. I would not be surprised, if possibly the March number also for CPI comes on a lower base. So I think once the CPI inflation number comes down, that gives a lot of comfort to RBI in cutting interest rates going forward. Secondly, the dollar index, which I've been advocating for quite some time, on your channel also, that dollar index is now down from 109 to 103 odd level. So this has given a great amount of sentimentally good feel factor to the markets. It clearly means that the dollar is getting weaker. The other emerging markets currency are getting more stable. And obviously, FI outflows, which you have been seeing in the last few weeks, have considerably come down. So, these are all positive indications that possibly we could see the markets stabilizing now. I think the markets will remain a little in a sideways zone, but at least the aggressive selling is now completely out. So we could reasonably say with some conviction that yes, the markets have reached a kind of type of immediate near-term bottom. And most importantly, I think now the market should be reacting to the corporate numbers, the January to March quarter numbers, which I believe are going to be significantly better compared to the December quarter. So all said and done, if there is a indication that the numbers are much better, then you're going to see a lot of money flow coming back in the market again. But the near-term trigger and the key trigger for the markets to go up significantly would obviously be the stoppage of FI outflows. Possibly from the April to June quarter, you could see some of this happening. And I think if that happens, then I think you could see the markets again moving upward. So I think this is a good time for investors to start nimbling and build portfolios and be constructive on good quality stocks. I think the markets have already discounted 80 to 90% of the damage. And I think now any significant fall from these levels looks very unlikely.
Absolutely. Now, Avinash sir, just let's start talking about a few pockets. I'll start off with the telecom space. A lot of action taking place over the last 2 days. Starlink's entry in partnership with both Jio and Bharti Airtel is something that everybody is looking at, as to how will it really pan out. What will be the kind of benefit and added on revenue streams that could come in for the telecom players, Jio and Bharti Airtel? For consumers, could it mean, a faster, high-speed internet, even at the remotest, locations? But of course, pricing will be something that we'll be looking at. At the same time, we are now seeing MTNL and BSNL also looking at about 13,000 crore rupees of raising via asset sales. So the entire telecom basket is in full focus. What's your exact sense of how should one be approaching this? Is it good for a near, medium-term kind of a theme that one should look at?
No, definitely. See, I think on a standalone basis, the telecom sector has done very well. In fact, we saw good numbers from Bharti in the December quarter, also for Reliance Jio. My sense is that, the Starlink business is yet, we yet have to know the complete details as to how the pricing will work, what will be the revenue share, what will be the margins. But having said that, Elon Musk, has tied up with both Bharti as well as for Reliance Jio, which clearly means that they want to capitalize on the market network of both these players. Almost 80% of the market is controlled by these two players. So I think the customer will definitely have a much wider option in choosing the internet service provider. Smaller players obviously are unlikely to continue because the might with which capital investment is going to come in is obviously going to benefit the customer, and obviously the smaller ISP players are going to be completely out of business. So my sense is that you'll have to wait for a couple of quarters, Sakshi, before we get to know what is the revenue potential, what is the margin picture. The commentary from both these companies will be very important. But I think net it's a big positive because the rural penetration for the telecom in India is definitely going to be boosted by this new service provider. But I don't think you would see numbers immediately in the next couple of quarters. Maybe after 6 to 12 months, you could actually see what is the revenue potential from this arrangement. And then obviously market would start discounting that in the earnings numbers.
Okay. Avinash sir, that's as far as the telecom space is concerned. I'm going to be talking about another key counter, and that is IndusInd Bank. I wanted to understand 2 days of recovery, especially today also there's another day, second day of slight recovery that we are seeing after that massive sell-off. Is there any opportunity that new investors can find in IndusInd Bank after the recent correction? Will things be finally back on track? Do you think one incident should not probably define or put a label on large private sector bank like an IndusInd Bank, or do you still think there could be a can of worms, there could be more troubles, and therefore one should better stay away and look for better opportunities? How would you approach IndusInd Bank?
So quite frankly, Sakshi, for a private sector bank to put out a statement on the exchange saying that there was an accounting process failure is something which is very shocking, because clearly, the bank is an institution where we trust the bank and we put our money there. So I think clearly that was a very big negative surprise. But I think having said this, I think the management has put on record after this, statement that the quarter four will be a profitable quarter. Now, if one were to invest in IndusInd Bank at the current odd levels, I would suggest that it's always better to wait for the quarter four numbers. Look at the management commentary. There's no hurry, because this stock is not going to go anywhere in a hurry. The stock has been beaten down, and for any upward movement, I think the markets would clearly look at strong data points, strong financial numbers, and the commentary post the Q4 numbers, because only then the markets would get confident. Although the promoters have clearly put it on record that they are confident that this is a small incident and it would not occur. I think what has happened is there's been a shakeout of confidence, on the part of the bank's management. And I think clearly a couple of days back, there was some news flow that RBI has only permitted a year's extension for the company's managing director, unlike what was expected earlier for 3 years. So, I would say that it's better to wait for the quarter four number and then I think take a call. The bank is not completely a similar case like Yes Bank, but I think markets have their own way of reacting. So it's always better to wait for the Q4 numbers and then take a call when some more clarity comes.
Okay, fair point. So that's as far as IndusInd Bank is concerned. I'll now ask you, sir, your preference. How have you been approaching, the markets with fresh investments now? Where do you think there are pockets of value and opportunity after 5 months of consecutive fall that we are seeing and the slight recovery signs that we are already getting to see? If in case this is the right time to start nibbling into the markets, where exactly should the fresh money go?
So I think, see, clearly we have a little more stock specific. Our sense is that we have seen almost 80 to 90% of the damage already done. And I think from these levels, the markets are unlikely to fall. Even stock specifically, I would say that, this could be a good time to start becoming constructive on some companies. And within that, large caps still continue to be our main focus. Like we like companies like Varun Beverages, we like companies like Mahindra and Mahindra. Varun Beverages is a very classic case where it's a product monopoly. It enjoys the franchisee of Pepsi. Recently, the company made a QIP of almost 750 crores for debt repayment as well as for some expansion. And plus, numbers have been very solid. The management commentary has also been very good. So, I would say that, these are companies where investors should bet their money over the medium to long term, because growth trajectory for the cold drink market is extremely strong, despite the fact that Reliance has now entered this market with their drink Campa. But still, I think looking at the kind of geographical, kind of coverage this company enjoys, and the plus, obviously, the new initiatives which they have taken, clearly points out that probably next 12 to 15 months, somebody could hold on, could see a fair value of roughly 575, 600 rupees. And within the auto pack, even Mahindra and Mahindra has come down quite, significantly down. Now, if interest rates come down, it's definitely going to help auto sales. It's going to obviously help the tractor market. The stock has come down from levels of almost 33,000 plus levels to 2,600 odd levels. Here also, I think we could see very strong numbers for the January to March quarter. The electric vehicle product portfolio is also shaping up pretty well. So I think, these are safe bets in this market where one could gradually start nibbling and start building them in their portfolios.
Okay, fair point. Another space that I wanted to get a sense on, sir, is with respect to the current tariff tantrums that we are seeing on an everyday basis, back and forth on several issues. And of course, every day we see newer countries, newer products getting added onto the tariff list as well. There is still no clarity as to how India is going to be impacted directly with any kind of reciprocal tariffs. There hasn't been any announcement thus far. But there is, on the other hand, talk about how tariffs are not just going to be hurting countries and economies world over, but also US themselves, and how US economy could get impacted because of slower growth and businesses getting impacted as well. There are also talks about US recession. How are you really looking at this entire scenario of what could further hikes in tariffs, a trade war mean for the US as well as for India, sir?
So I think, see, as you rightly pointed out, that things are still not clear. I think from April to the tariffs start, and I think you'll have to wait for a couple of months or maybe at least a couple of quarters before we see the impact of the tariffs on both the exporting countries as well as on the the principal US market. Tariffs definitely are not liked by the markets because that obviously increases the cost, it pushes up inflation, and for US, I think it's very crucial because there have been some reports that US economy could get into recession, and that definitely is going to be a big negative factor for them. See, as far as India is concerned, from whatever reports I have read, we have requested the US that we need time till September, and after that we will have a proper free trade agreement with them for a various variety of products and services. So I think it's too early to give a call, but one thing is very clear that the markets are going to be extremely volatile on this issue, and specifically countries like Mexico, Canada, where tariffs have been raised very significantly. In fact, China is also one of the countries where US has raised tariffs. So my sense is that this is going to obviously impact the market sentiment, make it more volatile. So one will have to tread very carefully on the exporting companies from India. I think for the companies who are directly focused on the domestic market, I don't think there will be any problem. But for the exporting countries, specifically for sectors like pharma, auto, IT, chemicals, I think you need to take a very cautious call once the quarter one, quarter two numbers for FY26 are out. So we have a constructive view, but we would prefer to wait for more clarity to come in on this point.
Avinash, I also wanted to just get a sense on IT pack particularly. There is this caution that some of the brokerage houses are really, spelling out that there could be the growth could slow down further than expected, in FY26 or not pan out as expected because of these tariff concerns in the US, because of AI-related concerns as well. Do you think IT is the most vulnerable sector at this point in time?
So I think, see, my guess is that IT sector is unlikely to see any major growth, kind of momentum, at least for the next 1 or 2 quarters. And I think, see, unless and until we see some strong US deals signed up by Indian companies, it still remains a big challenge because what is happening in US is that there is no clarity as to how the US policy will be for Indian IT companies. So in this respect, I would say that it's better to wait for maybe the March quarter to come out. Maybe you will get a little more clarity from the managements on the kind of outlook they would like to share with their stakeholders. But I think the larger IT companies like TCS, HCL Technologies, or for that reason Infosys, even from the smaller companies like Persistent, KPI, from wherever we have been talking to these managements, I think the mood is that still things are not that bad. I think they will have to give in at least the next 3 to 6 months. So it's better to wait and watch because normally, Sakshi, whenever you get these kind of broking reports of sounding negative, the sentiment changes overnight. So I would say that it's always better to wait. These are all strong companies, and I think you will need to give some time. Possibly post September, things will be more clear.
Okay, fair point. So that's as far as the IT pack is also concerned. Sir, give us your sense on the mid and the small cap basket as well. What's your approach here? Is the worst behind here, or is there going to be some more pain to be had?
No, I think say mid cap and small cap companies, I think we'll obviously see a better, we'll see a significant amount of price correction. My sense is that investors who invest here have to be prepared for more volatility and a little bit of underperformance at least till the June quarter. I think once the June quarter is over, you get better numbers, better clarity. Initially, I think it's going to be the large cap Sakshi because these stocks have been beaten down very badly and valuations have come up to fairly attractive levels. So I think the market would obviously like to first bet on the large caps. The small caps will also move on, but I think the kind of price upside which we have seen in the small cap, mid caps, and even the SME companies, there will be some amount of reluctance from the investors to get in at these levels. Probably June quarter will be an important quarter, and if that momentum is positive and we see good financials numbers, earning growth numbers, order book numbers, then I think the market confidence will grow. But I think you need to have the large cap first, stocks to move first. So mid cap, small caps, we are constructive, but we would say that here the investor needs to exercise a little more patience.
Okay. And how about the PSU spaces, sir? The erstwhile favorites, defense, railways, power space. Is there any opportunity emerging after, long haul of consolidation that's played out?
No, here also I think Sakshi, see, defense, railways have been sectors which have been very liked by the market. Suddenly now, they've gone out of flavor. As far as the PSU stocks, the banking stocks are concerned, again, a sector which is going to grow but which is out of flavor. I would say that these are all secular stories. And, obviously, if you have seen the news flow for Bharat Electronics, they have been getting very significant orders. So business continues to grow. I think, if you even talk about railway stocks, Titagar wagon has been beaten on very badly in the last 1 month, but order book continues to be extremely strong. So my sense is that somebody who wants to get into these companies should at least give a couple of years time frame, because you will not be getting the same market sentiment, because every rally produces new stocks and new stock leaders. So maybe the defense and the railway sectors will do well, but to expect the same level of upside in the very near term, at least the next 6 to 8 months, is difficult. Markets would obviously like to test these companies at least for a couple of quarters, and then once the sentiment improves, you could possibly see buying coming back. As far as PSU banks are concerned, Sakshi, again, one more thing is that after the IndusInd Bank scenario, people are a little cautious on whether RBI will initiate any inquiry on the derivative position for all the banks, whether it is private or public sector banks. So I think there's a little bit of caution here. But I think banks like SBI, Bank of Baroda, Canara Bank, from the private sector, ICICI Bank, I think somebody who wants to take a contra bet can definitely look at accumulating these stocks, for the long run.
Okay, fair point. So that's as far as the PSU story is also and how it is going to be unfolding from here. The other pocket that I wanted to discuss with you is the consumption space again. Why, Avinash sir, this is because we are just 2 weeks away from 1st of April, when finally the budget-related announcements will start to kick in. We had the tax bonanza that was announced, and we are hoping for all of that money to finally get into the hands of people starting April. Is consumption going to be a theme for the new financial year?
So definitely, I think consumption will be a strong theme. In fact, the budget also this time had the focus on consumption rather than capital formation. And I think the 12 lakh rupee exemption limit which has been announced in the budget, plus the rate cut which has been announced by RBI, recently, I think all this is going to increase the consumption level. So typically, if you ask me what is the propensity of this, I think you'll have to wait for April to June quarter numbers, actually. Only then you could possibly see some momentum coming in.
Yeah, absolutely. Understood that. Now, when we also talk about the earnings, I wanted to understand, do you think there could be another quarter of a pain that we are seeing already? This fiscal year largely has been a washout for large part of the earnings. Do you think there could be further pain or a continuation of that disappointment in earnings that we would see as far as the new financial year is concerned? Okay, I think there is some kind of a technical glitch. We'll try and have Avinash sir back on the screens. But in the meantime, let's actually look at the markets, 22,488. So we have had, a choppy first 15-20 minutes, and you see the markets absolutely flat. We've slipped 22,500 basket, and we have Avinash sir back on with us. Avinash sir, wanted to ask you, as far as the earnings picture is concerned, so far this fiscal year has largely been a washout. We have seen pain continuing to worsen with each quarter. For the new fiscal year, is there any hope of revival on the large earnings picture?
I think the January to March quarter will be slightly better than the December quarter, and April to June is going to be a much better year. I think we have been seeing that GST collections have been going up. Obviously, inflation is also getting controlled, and plus, as you rightly mentioned, consumption is something which is going to pick up once you see visible numbers from the April to June quarter. So we are hopeful that the next financial year will actually see corporate earnings growth of at least 12 to 14%. And I think if this happens, you're going to see a lot of excitement for domestic focused sectors. As I said, the export oriented sector may find little headwind because we are yet not clear how the US market shapes up. But domestic facing sectors like cement, infra, capital goods, building products, these are companies where I think you'll see a lot of kind of earnings recovery. In fact, looking at the FMCG basket also, probably wherever discretionary and consumer related kind of companies are concerned, you're going to see a lot of improvement starting next year. So we are keeping our fingers crossed. But yes, compared to last year, I think the coming financial year FY26 should be a lot better.
Okay, fair point. And that's as far as the earnings expectations also go for the new fiscal year starting 1st of April and the first quarterly earnings that we will be seeing, after we see the Q4 earnings as well. But also one more pocket, and that's the Adani Group stocks is something that I wanted to discuss. There is some sign of a recovery across the board. Again, expansion plans on course, and we are seeing some huge orders, tie-ups happening. Things, already started to look better when there was a clearance and Hindenburg winded up as well. You tell us, how would you approach Adani Group stocks right now? Is there any preference or of stocks that you have among the entire basket of 10, 11 stocks?
See, I think within the Adani Group stocks, we are positive on Adani Ports. I think this is one stock where you're going to it's a play on the Indian economy, and within the port sector, the kind of margins the company enjoys, the kind of performance the company has delivered. I would say that in case of Adani stocks, you need to be very clear that these are highly volatile stocks. Suddenly some negative news comes in, or typically there's a negative surprise. The stocks obviously react in a very fast, downside kind of fashion. So my sense is that we have been telling our clients that stocks like Adani Ports look to be the best. The other stocks in the universe I feel are slightly expensive. I think they are a little overpriced. So I think from a fundamental perspective, if you were to ask me, Adani Ports at around 1100, 1125 can be a good entry point for somebody who's looking to add in their portfolio for the next couple of years.
Okay, got that. Right in the end, Avinash sir, wanted to ask you, since we are sitting on Holi and there is a lot of color and brightness that we expect from Holi to spread across our lives as well as now on the street and on our personal portfolios as well. What is it that you would guide up until next Holi if somebody wants to invest in today? Any key stock ideas that you could suggest for people for next Holi if they could invest today?
No, I think as I mentioned to you, Sakshi, it's always better to put your money initially on the large caps. I've mentioned two names, that is beverages and Mahindra. But I think my simple suggestion and advice to all your viewers would be that this is a good time to accumulate good quality companies, and this is not the end of the road. We have seen many corrections in the past. India continues to be an attractive market, so I think just keep the time and the conviction and the patience strong. Normally investors buy stocks at peak valuations at very easy, comfortable kind of levels. But when the market corrects, the same stocks are avoided. So I think this is a time when you need to be a little contra. You need to build your long-term wealth portfolios and be constructive on the market. I think once the recovery starts, I think the sentiment can change overnight. So staying invested is very important in the game.
Staying invested is very important in the game, so one should definitely look at that aspect. And with that, thank you so much, Avinash sir, for being with us in the morning edition. I wish you a very, very happy, prosperous and bright Diwali, and this year turn out to be even more colorful than last year in terms of personal as well as professional growth that you see, and for all you and your team members and loved ones as well. Hope you have a fantastic year ahead. We'll see you back soon on another edition of Business Today. Thank you so much for being with us, sir. All right, viewers, we'll start winding up the morning edition of Trade. Remember, what we've seen thus far is that the markets have had a slightly choppy trade, but we're hovering around 22,500 and thereabouts, 0.1% higher. Let's also look at some of the key sectors and the key aspects that we are looking at in trades today. So as far as the markets go in terms of sectoral action, you'll be able to see that the Nifty is in the green. You also have the Nifty Next 50 up by about 0.3% odd. Nifty 500 flat with the positive bias. Nifty 100 stock also is about 1/10% up. In terms of other sectoral actions, banks, definitely the Nifty Bank led by 0.3% uptick. You see the financials also up in trades today. You have the metal stocks that are about 0.3% higher. You have PSU banks, private banks also inching up in trade. Oil and gas also about 0.3% up. But where do you see some problem? You see some problem as far as consumer durables are concerned. That's flat in trade today. Then you also have pharma that's on the back foot. You have media stocks that are on the back foot. IT, FMCG also on the back foot as well. So it's a mixed kind of a trade when it comes to the sectoral action particularly, but let's look at the top stocks on the Nifty, where you have stocks like ONGC up by about nearly 2%, BEL, of course, on auto flow news that's coming in 1.7% up, Tata Steel, Bajaj, Adani Enterprises are some of the other stocks that are actually buzzing pretty strong in the trade today. On the lower end, you have Freedom Finance, ITC, M&M, Bajaj, Auto, so some auto space stocks that are actually finding themselves on the slowest lane today, and therefore there is a decline of about 0.5% to over 1% on the large cap auto space stocks as well. So that's as far as the Nifty stocks are concerned. Let's also pull up the Nifty 500 basket to see how some of the stocks in the broadest index are moving at this point in time. You have IPI that's actually sharply up in trade. You have a 5% uptake. You have Adani Green that's also buzzing about 4% higher. D-Mart is back, 3.3% up. Godrej Phillips, you have JM Financials, Prestige Estates, SAIL, ONGC, Vijaya Diagnostics. These are the pockets that are actually holding up in trade. But on the declining side again, when you talk about the broadest index, you'll find a lot of names that are actually falling behind. Policy Bazaar, Sapphire Foods, KC International, Balrampur Chini, HDFC, AMC, Birla Corp, Brigade. These are the broadest index stocks that are actually falling behind in trade and not really doing too much. Let's also look at the mid-cap 100 stocks. Let's actually look at the stocks within the mid-cap 100 basket. There is, yes, a decline again on Policy Bazaar, HDFC, AMC, Bharat Forge, APL Apollo, Sona Comstar. But on the winning side, you do have some names on SAIL, on Oil India. You have Prestige, STS, JSW Infra, and Yes Bank. Some of those stocks that are actually showing us some traction when we talk about the broader index as well. So with that, viewers, we wrap up the trade, but do stay with us on Business Today Television, and throughout the course of the day we get you several interactions with top market masters and market gurus so that you can get a sense of what exactly are they looking at when they want to invest in the market. Stay tuned.
It's finally a liftoff for Starlink in India. After years of regulatory hurdles and uncertainties, Elon Musk's Starlink is finally breaking into India.